Hello, guys. Thanks for joining. We are wanting to cover day trading in this particular presentation, day trading. Okay. All right. Well, there are some basics in day trading. First of all, I want to talk about what is day trading? What exactly is it? Well, day trading is if you buy a position in a stock in one calendar day, you buy the position, let's say stock A, and let's say 8:30 a.m. You purchase it anytime during the day, okay? And you sold that same stock in the same day. All right. Stock A is bought and sold in the same day. That's considered a day trade. What are they doing that for? Well, they're hoping to buy A at one price and they're hoping to get rid of it at a higher price as soon as the stock moves. Of course, this doesn't become profitable until you're able to buy a huge number of stocks. So, for example, if a stock goes up 50 cents a share, if you've got, you know, a thousand shares, that's $500, right, for one stock, one position. And you could do that, pocket the money, and move forward and go on and on, as a source of income. That's what professionals do, right? If you're a novice investor, understand, first of all, day trading and investing are two totally different things, right? Just like options trading, totally different things. So I'm not going to talk about investing. We cover those in our courses, in our, training sessions. Those are people who are investing. Day trading, some people who are trying to get a revenue stream off of the markets. Now, if you are deemed a day trader by your broker, you're going to have what they call a minimum amount of 25K in your particular brokerage account. But that's to protect the brokers from, as well as yourself, because I think a lot of day traders use what they have called a margin account, which gives them more leverage to buy more stocks using the broker's money. Now, if you look at the example I have given you, 1,000 shares, if you have 1,000 shares of a company, that may cost a little money. It may be more money than you have in your account. So you have a margin account to be able to use the monies that your brokers will allow you to borrow, so to speak, to buy that particular security. Now, if you make 4 or more day trades within a 5 calendar day period, you're going to be flagged as a day trader, okay? Flagged as a day trader. Now, when you get that flag, they're going to say, hey, you have a call of about 25,000 that you need to put in your account. You can't do that. They're going to restrict your account for about 90 days. Okay, they give you time to get it in there. They're going to restrict for about 90 days. And they're going to say the only thing you can do is sell out of that account. You can't buy anymore. So I want to tell you guys right up front, in order to go down this path, be ready to have $25,000 in your account to do this. I mean, if you're doing more than 4 in 5 days, okay? Do more than 4 in 5 days. If you do less than 4 in 5 days, you're fine. You can do that if you know what you're doing. Okay, that's the first thing I want to talk about. Now, what's considered a day trade? Let's say you get stock. This stock, you get 100 shares, in your first trade, and you get 100 shares in your second trade. If you sell 200 shares that same day, that's a day trade, okay? That's a day trade. Or if you buy 100 and sell 100, that's a day trade. So that's going to be considered one. That's considered one, okay? The things you should consider before day trading is first, this minimum amount that you need. Number 2, the tools that are required to do analysis work on these day trades. So remember, when you're day trading, you're looking for a quick profit within a day. Now, before you are able to ascertain that profit within that day, you need to have tools out there available. What kind of tools are out there? Well, tools to allow you to know the interest in that stock, which when I say interest in the stock, which means if a stock is available to trade and you got more buyers than sellers, well, you know that that stock is going to move upwards. You can jump in on that stock. Now, are there tools to allow you to see that? Yes, the professionals have it. You may not have that tool, okay? So that's something you need to consider. So it can be profitable, but it can also be dangerous if you don't have the right tools in place. You don't know the technical analysis that goes along with day trading. That can lead you into some dangerous territory. Some people will guess their way through it and make some money and be okay with that. As long as you're doing less than 4 and 5 days, enjoy it, have fun. But I thought about teaching day trading as a course, but I also thought about that requirement there and also the software that's required to make you an effective day trader. And I said, oh, no, we're not going to do that. Options trading is a much better route because options trading allow you to mitigate risk and maximize profit. When I say mitigate risk, you're able to trade with, definitely use a lot less money to make a more profitable trade. So, but that's all I have on day trading, and hopefully this helps some of you guys who are considering it and want to do this. Again, I'm not dissuading you from doing it. If you have the technical analysis skills, you have the 25K, and you have the software to do it, by all means, go for it. All right, thank you. Thank you very much.